Well, a lot of people are focused on the Trump rally. So they ask, if the rally is so strong here, why should they waste their time looking in other markets? And so for us, it's almost the exact opposite. Because investors are so focused here in the US, we want to be everywhere else. So for our funds, we're at the lowest level of investment here in the United States since we launched our firm. We have 16% of our global fund in the US. We have 70% in Europe. So we want to go where investors are not going. Because in Europe, there's just much more opportunity. Companies are breaking up, spinning off, going through restructurings and all kinds of changes. And the fact is, that's what attracts us. We're special sits investors, so we focus only on companies going through real change. So investors are concerned about Brexit and what that might mean. For us, we're hoping that's an opportunity. So even though we are global investors, we haven't actually had an investment in the UK in over 3 years. We focus everywhere else. The UK has not been a cheap market. So Brexit, which creates stress, strain, and fear, hopefully will knock down valuations to give us an opportunity. So we look at crisis as opportunity. It's Brexit. In France, it's the elections. Germany, the fears, will Merkel keep her job at the next go-around? And so all of these issues create situations that sort of keep investors away from those markets, which means values get very good. And that drives us into those markets because we want to be there when there's less competition. And that's what we've built the foundation of our firm on. It's not going where the crowd is, it's going where people just are not interested in finding the value. Investors are concerned about Merkel, will she have a fourth term or not? And for us, if she stays, great. And we do think that ultimately she will win. And she really kept the whole EU together. So she's been one of the greatest leaders that you could have in Europe, period. And she made a huge difference. There are others vying for the top job. Depending on who wins, it'll probably be a continuation of what she started with some tweaks. Germany's a great market. You have a lot of family-controlled businesses. You have a lot of industrial businesses. You have transitioning to next generations in these family companies. So you have a lot of deals. M&A activity is extremely high. And so really when you think about Evermore and what we're all about, we're not just value investors, we want catalysts. We want not just cheap, we want to know things are happening that are going to get the value out of the company and into the shareholders' hands. And so stress, like in Germany, it creates ripples in the market and it creates an opportunity for us to buy situations. So when thinking about China and the slowdown there, that created opportunities for us in the shipping space. So historically we've had nothing in China because it was a market that we would say was too good for us. It was a high multiple, high flying market, and now with the slowdown, it's making some of the conglomerates and holding companies more compelling. What we focused on is the companies that were crushed by the Chinese slowdown. Those were companies in the dry bulk sector that were bringing goods to China. So some of those stocks were down 80, 90, 95% over the last couple of years, and historically we just stayed away from them. But once these were down, we said, okay, the bad ones and the good ones are valued all about the same. Let's focus on who we think are the survivors, get to know the managements, the companies, the assets, and they were recapping their balance sheets. So we put up a lot of capital and helped them restructure their financials. Some of those have been the best investments we've ever made. So even with no pickup yet in China, but a perceived slowing down of the slowdown so that maybe it's starting to turn, these shipping businesses have really been transformative to our portfolio. But again, it's going where investors are not. And just jumping back to Europe for a minute, all I would say is people think about bad headlines, but the fact is the headlines are bad, the stories are good. And so you have to dig past the headlines to see the opportunity and not be driven by fear on some of these TV shows that scare investors, get out of this or get out of that. Those are good headlines for us because it creates good values. Question about the wall and what will that mean? Well, it knocked down Mexican equities. We have not historically invested there. Now we're looking at them. Mexico is chock full of conglomerates that they might actually be in the cement business and the telecom business and other areas. We like these kinds of businesses. The fact is, again, stress and strain create opportunity. Whether the wall goes up or not, I think in the long run, these kinds of things they never are as aggressive as you think. We do find it hard to believe that you'll actually have a real wall that won't have other ramifications, or if the wall does go up, maybe there's other ways that goods start to move around. And so it hopefully creates an opportunity as an investor. We always look for opportunity in crisis, as I said earlier, and the fact is big headlines like that create opportunity for investors. And thinking about how do we think about the future? For value with special situations, one of the best times to be an investor. I started investing in Europe in the early 90s. They were going through a crisis. It's 30 years later. It's a different crisis. It's deeper, it's wider. Those investments 30 years ago were some of the best I ever made. And as that played out, we looked at other things. Well, today in Europe, it's the same kind of situation. So the opportunity for cheap stocks with catalysts for value creation is unbelievably good in Europe, number one, parts of Asia, number two, and the US is the least because it's played out so well here. The others are way behind the US. So we're pretty happy with what we're seeing out there and trying to take advantage of it.